For the next 13 minutes, I'm going to simplify the way you analyze and how you actually get trades. Now, do you ever come to your charts and then on the H4 or any bigger time frame, it says, let's say it's an uptrend or buys. But again, when you come down to smaller time frames, let's say M15 or M30, it's a sell or it's a downtrend. In today's video, I'm going to break down the concept of multiple time frames and how you can actually use it to get better entries. Now, I'm going to make this as simple as possible. Without any further waste of your time, let's dive straight into the charts. Now, the first thing is understanding the concept of time frames. So when we are on the daily time frame, that means it takes 1 day for each candlestick to form, right? So I'm just going to mark out any candlestick. So we can consider this most recent one. Let me just zoom in. So the first candlestick that I have marked out is the daily candlestick. Now that means it takes 1 day for this candlestick to form. And now scaling down to H4, that means we have 6 H4 candlesticks in 1 day, right? Because it's 24 hours in a day and then 6 candlesticks of H4. That means there are 6 candlesticks, right? So the whole concept is a bigger time frame is going to have that bigger outlook. What you actually see on the bigger time frame may not be exactly what you see on a smaller time frame. Now, since we are on H4 currently, let's just do 2 more and then we can see. So we can just mark out 1 H4 candlestick. Maybe let's consider this bullish candlesticks, this right here, and then let's scale down to H1. That means we should find 4. Okay, there we go. So we should find in 4 H1 candlesticks. So we have 1, 2, 3, 4. Well, I marked it out wrongly, but we should have 4. So that's the whole concept. Now, having understood this, so how do we use time frames to find better trades and entries? So the first one is we have the structure time frame. So under the structure, we are just getting the overall market outlook. It could be an uptrend or maybe a downtrend or just a sideways market movement. So basically we are just trying to establish the overall market structure. So the first one is going to be the structure, okay? So I can call it the structure time frame or the structural time frame. Now, the second one that we are looking at is the behavior. Now we need to know what the market behavior is. So next one is the market behavior. We can say the price behavior. So on these time frames, we are looking at what the price is doing. Do we see weak rejections? Do we see any changes? Stuff like that. So in here, we are just looking at how the price is behaving. And then lastly, we look at the entry time frames. Now this is a good one. So it's entry and exit time frames. So now right here, it's time to get entries. Well, do we have an engulfing candlestick? Do we see maybe bullish momentum so we can get trades? Basically that way. For a day trader just like me, I would start from the H4. So the H4 would be my overall structure. So I'm going to come to the H4, see what the overall market structure is, and then for the price behavior I can scale down to H1 and see how the price is behaving. And then finally for the entries, I'm going to go up to the M15. Sometimes I can even go as far as the M5. Alright, so let's go to charts and see. So we can choose any random pair, maybe Euro AUD, and then we can try out a few things. Then we can see how this actually works. So we are on Euro AUD. So I'm going to start off from H4 since it's the overall structure. Now in this case, we can see that the price is pushing to the upside, right? This is very easy. So every time you are on the bigger time frames, you are going to easily establish the overall market structure. So it's very important that you know well if the price is actually in an uptrend or a downtrend or a sideways move. So right in here, it's a very clear upward move. You guys can see that. Now we are just going to mark out this point here, so we can just draw a level right here because that was the most recent level, and then we can also have probably another level right here. Now I did a video about the strategy on how I do get these trades, and I'm going to put the link just down in the description below. All right, so having drawn out these levels, now we can scale down to H1 because now we know that the overall market structure is to the upside. Obviously, what comes into our mind since we have the overall structure is we could be looking for buys. That's the first thing. So now let's scale down to H1. There we go. Now on H1, we are looking at the behavior. Now, what's the price doing? Do we see any rejections? Because obviously, if let's say we had an upward move, we could have an upward move. And then at some point, we could experience a reversal. So we can easily establish this on H1 behavior. We are looking at the price behavior. How is it behaving? Now, this is how we are looking like on H1. Still on H1, we can see that we are in a push phase. Now, I've always said this, guys, every time the price is moving, we should expect a push phase, and then we can always have an exhaustion or a pullback, and then furthermore a push phase. So I always try to emphasize the fact that we shouldn't always take trades every time we are in a push phase. So every time we have a push phase on, we are not taking trades. Why? Because more often when the price is in a push phase, we expect a pullback or an exhaustion. So I wouldn't want us to suffer the drawdowns and then the emotions that come in and all that. So it's better that you wait patiently for these levels to be reached and then take trades. So it's the same thing here. So right in here now, we can understand that, well, the market is in a very good push phase because we can see that the price pushed out of this point and then this point here. So you can see that the price broke through this level and then we came back for a slight retest. Obviously, every time the level is broken, so we have this and then we break the level and then we come back for a slight retest and then we are pushing to the upside. Again, remember, every time these levels are broken, we should always expect retest. So at this point, if let's say we were at this point, we would be like, well, let's scale down to M15 and then see what exactly or what we can exactly get trades. But we weren't there. So considering the current market behavior, since we are in a push phase, we shall wait patiently for a pullback, probably to this point. Why this point? Because it's the most recent key level that we had. So we could expect the price pushing back to this level, and then at that point we shall get trades. Now, since M15 is our entry time frame, it's where all the magic happens. You're going to get that in-depth look, exactly what's the price doing, and then you have the confirmations. So there we go. So on M15, really wouldn't say that, well, let's take a trade because we can see that the price is pushing up. Okay, it's okay, but taking a trade at this point is very risky. Why? Because on stopping our stop loss, we have to extend it beyond the most recent level. So you can see that we would have to bring it up to this point, and that doesn't work. So we would have to wait patiently. So for Euro AUD, we shall just have to wait patiently for a pullback or an exhaustion phase, and then we shall later confirm a trade. So that's the whole concept. Now we can try out any other random pairs. Let me close my eyes and then choose any. CAD CHF. So it's the Canadian dollar and then the Swiss franc. Same concept. We are going to start off from bigger time frames. It's H4. Like I said, H4, we are getting the overall market structure. What's the price doing? So in this case, we can see that the price is pushing downwards. You guys can see that, right? So again, I didn't mention this, but as a day trader, I'm looking at exactly what the price is doing today. Today is not yesterday or the previous month. No, I'm just looking at what the price is going to be doing today, and that's why I look at this structure most importantly. So we can see that the price is in a push phase to the downside, and again we can go ahead and mark out our levels. So we can have this as the most recent lower high, and you can also mark out this level here, having seen it had just gotten broken, but it's not yet complete. So let's go ahead. So we have the structure now. We can start scaling down to H1 to see the price behavior, and there we go. So very good one. We can see that the price is in a very good push phase to the downside, and now we are waiting for the price to break through this point. Now at this point I can say, well, I could get a trade and it could be a good one, but I have to scale down to M15 to actually get the better entries. And actually at this point I may not open up a trade right now. Why? Because this level had been respected. You guys can see that the price initially came in the same big push phase. We reached this point and guess what? We saw rejection and then we pushed back to the upside. So at this point I may not take a trade right now the way I'm going to take my sales now. No, I could just have to wait to see this level get broken. I can see it's getting broken, so I'm just going to wait for the next bearish candlestick that should close below this, and then I'll take a trade right around here. Right now it's live, so I'm just going to be doing the same analysis and sharing it in the Telegram channel. You can actually join. The link is just down in the description below. That's something that you have to incorporate into your trading. Most importantly, after understanding how time frames work, is the patience. Now right here I could panic. Well, let me take a sell because I can see that the price is pushing down and I can see the push phase is very strong. Well, I'm taking a sell, but guess what? I could get stopped out and then I see later the price going down. So whole thing right here is patience. You getting to wait for as long as you can to have your setup form up very well, and then you can get those sniper entries. Now a quick recap. So first things first, bigger time frames, H4. You can even start from the daily depending on which type of a trader you are, but the first and bigger time frames is the structure time frames. We are trying to establish the overall market structure. It can either be a push phase to the upside or to the downside or a sideways price movement. Then the next time frames is the H1, or it can be the H4 just in case you started from the daily, but I would say H1 for day traders. And now right there you are looking at the price behavior. What do we see? Are we in a very good push phase or a pullback, and we can get trades? And then lastly, the entry time frames. The entry time frames, it can always be the M15. You can even scale down as much to the M5. So that's how easy the whole concept is. So you can actually be part of my exclusive mentorship just like how you guys requested. I'm going to put the forms down, fill in your details, and then I will reach out to you personally, get you started, and let's kill it together. All right, see you in the next video.